Okay, so I have very little time, so I'm just going to say this. I know that we've been talking two different things, but we're actually saying the same thing. So I broke out a translator to translate what I'm trying to say right now. Okay, work your magic, translator bot. Damn it, it broke. All right, I'm just going to do the rest in English here. So, yeah, unless you subscribe to this video, leave a like, leave a comment. But on a serious note, though, if you're hashtag AMC strong, you'll want to stick around to the end of the video, mostly because there are a couple tricks up their sleeve that they haven't pulled yet, and I think it's important that you kind of know about them. Okay, so first and foremost, I'm in no way advocating you trade or do anything specific. Any sort of actions that you take, the responsibility falls upon you. But to start this, first, AMC is a company. And in a video I did long ago, I said that the benefits of a stock ownership is that when the company benefits, you benefit as well. Now, how does AMC benefit? Well, first and foremost, everybody has this misconception that box office numbers is an indication of how well movie theaters do. What they don't realize is that they only get maybe 10, 20% if they're really lucky of the actual box office revenue. Most of that cost is actually lost due to their lease, due to staffing, due to like a bunch of their overhead costs and like rentals for the movies and stuff like that, right? Where they actually make a lot of their money, and solely most of their money, is the snacks. So if someone was to go watch a movie and order a whole ton of snacks, like a drink, some popcorn, some other snacks like chips or whatever, that's where AMC can actually grow a little bit of the revenue. You get what I'm saying? The second part of this is that, did you know your broker can actually put your shares at risk? Not only that, did you know that they can also locate those shares to short through you? And the third part of this is that, did you know that you can actually stop this? And if they were to do this anyways, they're actually doing something fully illegal? All right, so based on my YouTube stats, I know that most people drop off between 30 seconds and a minute from now, but I urge you to stay a little bit longer because I know this stuff is boring, but it's very important. Now, what do I mean when I say that your broker can actually put your shares at risk? First, we have to talk about how normal short mechanics work. And that is, let's say I'm a large holder of AMC. Let's say I have like 500,000 shares, right? And I don't like it sitting there. I want it to actually do something. Someone else as a broker, let's say IB, for example, says that, hey, you know what, why don't you give us, some of your shares so we can just sell it out to people and allow them to like short sell the stock if they want to or whatever, do that sort of stuff. Because the brokerage's goal is to make money through transactions. The more transactions they do, the more money they make. See where I'm going? Now, I'm a large holder of this, and I don't want to give this away just for free, just for nothing, right? That's not how this business works. So I'll charge IB maybe a 1% interest rate on the shares that I loan to them. So they agree, I give them 500,000 shares at 1%. That's only if someone actually takes those shares to short. Now, in the other scenario, what happens is that a large institution comes in and says that they think that AMC is going to go to the core and stuff like that, and they want to take my 500,000 shares to go short it, right? So they take my 500,000, they short AMC, and then what happens is that IB says, oh yeah, the AMC shares, that if anybody else, day trader wise, wants to short it, it's become hard to borrow. So we can't find any shares to allow you to short this thing. And that's where the retail comes in. Now, here's where it gets a little messy. Now, when you loan out your shares, if you see like, 1% rate, a 10% rate or whatever, most people will think, oh, wow, I'm going to get 1% every single day off my AMC shares, or 10% is even better, right? That's not the case. First off, the condition that has to be met is that someone actually has to borrow those shares. Second is that this 10% or whatever is calculated as a yearly rate, not a day rate, not an overnight rate, a yearly rate. So, you're not going to make 10% off your position overnight. That'd be kind of crazy. But the last part of that, and I feel that this is actually the most important, is that when you do this, when you enter this program, there's a little fine line print there thing that says that if you enter this program, you will forfeit your SPIC and FDIC protection or wherever you're from. If the broker goes bust or some other shenanigans are pulled, your money is not insured. So you risk losing it all. Now, there's a sneaky little degree of nuance in there, right? Because IB is openly telling you about this, right? Which is great. Transparency is nice. However, if you're at a brokerage and you cannot find this very easily, or they don't tell you or they don't say anything about it, don't automatically assume that they don't do this already. Find out and get definitive proof in writing where they can show you where it's public. You agree to the terms of service, it's their playground. You are in no right here. So how do you solve that? Obviously, that is to find a brokerage that offers it or displays it. I'm not saying IB specific. I'm saying that there are a bunch of other good brokerages out there, but find out the specifics of it and then make a decision whether to stay with your current brokerage or to move on to another one. The third thing I kind of have a concern with is that if you look at the 13 FHRs on who's holding AMC, again, we can't see what the actual short share amount is, but if we look at it, we'll see that they're actually net long. They have a bunch of call and put options, but they're essentially net long from what I can see. For those who care to remember, there was a man named Bill Hwang, and he ran a fund called Archipelagos Capital or Archipelagos, I can't remember, but he was not a short seller. He was, in fact, the opposite. He was a super bull, and he was an over-leveraged bull on top of that. Now, if you guys are wondering what I'm talking about, look at Viacom. Viacom dropped significantly overnight with this guy just being a long buyer. And that's just one firm liquidating their entire position or most of the positions. I don't know if they actually did some residual liquidation days afterwards, but a majority of it got liquidated on that day overnight. Now, what would happen if a bunch of institutions are trying to liquidate? So I kind of have a solution to that. And shout out to Tom Nash for pointing this out because I wasn't paying attention when this happened. But when Adam Aron diluted the shares by printing more to raise capital for AMC, yes, that is to make their balance sheets look good and to raise capital and so forth. I agree. That is actually something that's very good. But in the grand scheme of things, I think it's also that he should actually continue to dilute shares whenever possible. And here's my reasons why. Now, for those of you who remember when Michael Burry used to tweet, he tweeted at Elon at some point when Tesla was about to be included into the S&P. And what that meant was that basically a lot of people were going to add Tesla to their ETFs and so forth. And obviously, it causes the stock to go up because people are buying at that point. And the way that S&P theory works and the way that they operate with their portfolio is that they kick out some of the loser stocks in there, but they add to their winners. Now, the higher the Tesla stock went, the more shares that they had to add. And we saw how explosive that was. Now, this creates a couple problems. First one is leverage. And they just become super over leveraged. So if Tesla was to tank hard, or if the SPY was to tank hard, it could take each other over. Again, it's not going to tank the entire market, but it could have an over exaggeration to say the least. And the second one is mostly having to do with their liquidity. The best way that this was explained to me was that if you guys remember Indiana Jones when he got pushed off that rooftop and he fell into those awnings, right? Well, imagine if there was only one awning there. And that is your total share pool and everything, right? If he fell through that, whoops, I tapped my camera there, but if he fell through that one awning and then just kept going, there was no other awnings there, he would just go with splat. And Mythbusters kind of proved this. But if you had more awnings there, let's say like 6, 7, 8, 9, 10 awnings there, right? Let's call those your share dilutions. He not only would it break his fall, but he might not even hit the bottom. And that's where I believe that a solution could be found by share dilution. So to throw it back, if all these firms decide to simultaneously liquidate, the more and more share dilutions that are there, the less of effect that they'll have to try to push the stock down. It'll possibly go down quite significantly, but it won't essentially go to zero overnight. So my final thoughts and opinions on this are that, first, I don't think that was a sign from Adam when he was not wearing shorts during that interview, and I think it was funny. But second, as an old liquidity provider, when AMC swept above 50 into 60s, that violent amount of move, yeah, I would quantify that as a short squeeze. Because everybody seems to have this weird notion that the small little upticks here and there are short squeezes. That's not a short squeeze. Short squeezes are extremely violent, extremely quick to the point where they get halted. And that 50 to 60 run I did, that was a short squeeze. Lastly, I don't think the enemy here is actually majority of just hedge funds right now. I think it's more so having to do with the market makers. And again, these guys are just trying to do their jobs and everything. But I could probably touch a little bit more on market makers and what they do. But for legal reasons currently, I probably can't. So I'll basically just leave you with this. Just remember, just because you're a day trader doesn't mean you have to trade every single day.